Hello and welcome to WalkerTalks, where we discuss everything real estate and real estate adjacent. I'm Hanna Guty. I'm a real estate agent with the Walker Real Estate Group at RE/MAX Absolute in Ottawa, and I'll be your host for the episode today. I've got a very special guest with me who is very well versed in all things mortgages and lending, and he's here to give us kind of a deeper insight on how a mortgage broker is involved in a real estate transaction, a little bit of behind the curtain on the pre-approval and lending process, and just the current environment in his industry. So without further ado, I'd like to introduce Brad Nemes.
Thank you very much. Thanks for having me.
Of course, of course. So Brad is a mortgage broker with Capital Mortgages here in Ottawa. And I came to know Brad simply from a presentation that he provided for our brokerage in 2022. I felt that he was so knowledgeable and so articulate when it came to breaking down some things for us realtors. So I knew that would not be the last time that we worked together. And if you're not already on Brad's mailing list, I would highly recommend it. Not only does he share really quick and concise and relevant information every week, but he also shares really great wine suggestions every week. So I know I appreciate those. So thanks so much for joining us today, Brad. Why don't we jump right in and talk a little bit about the current state of the market? So I'm really curious what the first couple months of 2023 have looked like for you.
It's really the same. Each year, it starts January, February is quiet. You go through Christmas. Everyone's thinking about Christmas. They're not thinking about buying homes or financing or anything like that. And then January, there's always a flurry of activity. And this year's no different. The media makes it out like we're going to lose our houses and everything. But really, I've done a lot of pre-approvals for the year already. Mm-hmm. And I'm getting new calls every day. So the same cycle starts every year, regardless of the rate. Yeah.
Yeah, and just anecdotally from a realtor standpoint, I mean, I'm probably not the only one who would say it's been really, really active the last few weeks. Mm-hmm. Like I just had a listing in Carp where over the last year, the average days on market was in the 40s. And we had 12 showings, a ton of inquiries, and it ended up selling in under 2 weeks and at 98% of asking. So, things are still quite active. Do you see a big difference January, February compared to any other years?
No, not really. Well, the last 2 years were different, right? Where you had to, basically see a house in 5 minutes and make an offer on it and then overbid. That's gone.
Right.
For the most part. There's still some people coming in, and there's some activity, but you're not seeing the offers being made $100,000 over anymore, are you?
No,
right?
Very true.
So that's gone. And so a lot of the stress, the personal stress that clients go through in making an offer, it's been reduced, and they get to take a little more time, and we get to take a little more time in the process and talking people through it instead of like, oh my God, here we have to go now. Mm-hmm.
Yeah, absolutely.
And so the pressure's off the buyers much more so than it was last year, where you couldn't relax, and people would lose 3-4 listings, and they'd get really disappointed in what was happening, right? Mm-hmm. And then we had to turn around within like minutes and have mortgage approval in hand, which we were able to do. It's just we have to do a lot of pre-work to be able to do that.
Yeah. So what are your predictions like for the rest of the year?
The rest of the year, okay. So really what I do is I look at a lot of what the industry economists say and what the bank economists say. And it's all based on inflation right now. We've had really high inflation over the last 12 months. It's starting to come down. It's trending down because the rates have gone up so high. What we're expecting over the next 12 months is a small softening in the fall. And then over the next 2 years, we're looking at hopefully returning to 3 to 4% range. And I don't think we're going to get below that much more than we have. The 1s and the 2 rates, they're an anomaly. They were a COVID anomaly.
Yeah.
So as long as we end up in the 3 to 4%, things will be affordable for most Canadians.
Mm-hmm. And I think people are starting to realize that it was an anomaly at some of those rates that we saw, and things are going back to a bit of normalcy.
Yeah, absolutely.
Yeah. Who do you feel has been the most affected by the rate hike cycle that we've seen for the last little bit?
Well, let's talk about the ones that haven't been affected. And those would have been the buyers that bought 2 or 3 years ago that got the fixed rates. Everyone else has been affected. If you have a variable rate mortgage, and I have a variable rate mortgage, it's gone up a lot. If you were a first-time buyer last summer, you may be qualifying for 10 or 20% less than what you qualified for last year. So yes, the first-time home buyers are being affected. The refinance people are being affected. The investors are being affected because what the banks are doing is as the rates go up, the qualifying rates are going up, which means you can afford, you will qualify for a lesser mortgage.
Okay. Do you see anything changing with the stress test at all?
No.
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 They would keep it the same.
No. FSRA and the Bank of Canada want to keep the stress test the way it is.
Is that one of the biggest hindrances right now for, let's say, a first-time home buyer?
Oh, absolutely.
Yeah.
Because, let's say we do a 5% down mortgage right now. I can get that down into the mid-4s now. But you still have to qualify at 2% more than that. And you always have to qualify at 2% more than what your contract rate is. That's not going to change. The bank likes the way things are going. The Bank of Canada likes the way things are going. They don't even want to increase the insured mortgages to 30 years because it's only going to affect their purchase price by maybe 8%.
Right.
It doesn't make sense for them to change those rules.
Okay.
We need to protect our asset base that we have across Canada.
So you touched on variable versus fixed rate. You said you have a variable rate mortgage. Currently, what is your recommendation? Let's say it's a first-time home buyer that you and I are working with. What are you recommending to them right now?
Most of the time right now, I'm probably going to say a 3-year rate.
Okay.
But it really depends on who the client is.
And that fixed or variable?
Fixed, absolutely fixed.
Okay.
First-time home buyer, 5-year fixed, 3-year fixed.
Okay.
We can get the rates into the mid-4s right now for a 5-year or a 3-year. And I think a mid-4 rate is quite reasonable. And it gives you that stability. And you're looking forward over the next 3 years. So you take a 3-year rate. Maybe it's a little higher than the fixed, the 5-year. But where are we going to be in 3 years from now? Will it be a little lower? I hope so. But I can't guarantee that. Nobody can. The Bank of Canada governor came out 18 months ago and said, well, we're going to have low rates for the next 5 years. And that's what we based our decision-making process on. Bank of Canada governor says it. It must be right. And then we hit the inflation in January and everything changed. The war changed everything. COVID's still coming back again and again. It's changed, continuing to cause problems. So really, 5-year fixed for a first-time home buyer, for sure, maybe 3-year.
Okay. Do you see that changing as the year goes on, or is it highly dependent on the individual?
It's really dependent on the individual. It depends on their risk tolerance. It depends on where they are in their career. If they know that they're getting a large increase in salary over the next 12 months or 24 months, then we can talk about different options. But if you know that their income is going to be fairly static, you want to give them static payments. You want to keep things under control.
Yeah, that makes sense. So on the topic of first-time home buyers, how can they best be preparing? Let's say they're 1 to 2 years out. What are things that they can do to make themselves a great candidate and set themselves up for success?
They really need to talk to someone like me right away. There's a lot of things in behind, especially credit.
Right.
And credit and income are the two of the biggest things. So credit, I get a lot of first-time home buyers coming to me, and it's like, I pull their credit report, and it's like, they've got 2 credit cards and a car loan, and that's really, really good credit for CMHC, for an insured mortgage. I get other clients where they have a $1,000 credit card. And I'm like, you can't do that. You have to have longer credit. CMHC requires that you have 2 active trade lines. A trade line is any kind of credit card, line of credit, car payment, student loan, for greater than 2 years, for greater than $2,000. That's the guideline. But you get every once in a while, I get one that have like a $500 or a $1,000 credit card on.
Yeah.
And they're like, I don't want more credit.
Yeah, they probably think they're doing the right thing.
They think they are.
Yeah.
They think they are. But really, it's about capacity. So if you have $1,000 credit card and your balance is always $1,000 on it, you think you're being good because you only owe $1,000. But you're hitting that high level ceiling. You're hitting the top of your credit all the time. Your score doesn't go up. You want a $5,000 credit card with a $1,000 balance,
Right.
or a zero balance, because it goes to capacity on what the credit card shows.
Okay.
So that's the biggest miscommunication there is in our industry. You need to have a lot of credit to be able to buy your house. So when it comes to income, people will have, when they're younger, sometimes they'll have one or two jobs. And when one's job's part-time, or they stop that part-time job. So I have to coach them through what is a qualifying income. And some of the part-time stuff, if you've done it for a long time, that's great. We can use that average. But if you do it seasonally, or you've gone from job to job to job, maybe not.
Yeah.
So we've got to be careful about stuff like that too.
Okay. So would you say that getting credit, in the right place is a bigger hurdle than getting a down payment together? Or which would you say is the
They're
biggest hurdle?
all three are connected. So down payment's the most important one as well. And some people, they manage to save their 5% or 10%, and they do really well, and they've been savers their whole life. It's fantastic. Then I get other people that are using the bank of mom and dad. And the bank of mom and dad is still a growing industry in Canada. It's the largest source of down payment in Canada right now.
Yeah.
But you have to be careful with that because, again, the banks and the insurers, they want to see that the person buying the house has at least 1.5% for closing costs of their own resources. So you cannot gift that.
Right.
All right. So that's another big thing. You got to have some down payment, some of your own money in your accounts to be able to satisfy the bank conditions.
Bank mom and dad can't entirely foot the bill.
Unless they're going to be 100% cosigner, and that's a different situation, and then they're on title. And yes, I'm doing 2 or 3 of those every quarter still.
Really?
Yeah.
Oh, that's interesting.
Yeah.
Okay. And how do you assist throughout the home buying process? So for this first-time home buyer, let's say, maybe they've spoken to you, they're out in the field seeing homes with a real estate agent. Are you in touch with them throughout that process, or?
Absolutely. So when you finish your application with Capital, with me, and every person's slightly different, what you'll get from us is we'll give you a range of what you can qualify for, what your property tax for that property may be, condo fees for that property may be, and we try and stay within that parameters. Then I'm going to talk to you about, okay, here's our levels. We can't be above this. If something's close, give me a call, and we'll talk through it. I want to see the listing before you make an offer. And all I want to do is double check the numbers. I want to double check the numbers. I want to compare it to the rates of the day, and see if we still qualify. That's the most important thing. Not a big deal. It's not going to be a big deal this year, but it was last year as the rates kept on going up and up and up. But this year, it should be more static. And then through the process, if you take a week to buy a house, that's amazing, okay? Most people aren't doing that. They're taking 3 to 4 months to buy something. So you're going to get emails from us on a every 2 weeks.
Okay.
And we're going to talk about, one's going to talk about closing costs, and the other one's going to talk about lawyers. The other one's going to, it's going to lead you through all the different questions you should ask through the pre-approval process. Because you don't want to hear from me every 2 weeks going, hey, did you buy a house yet? How's things going?
Yeah.
Do you need me right now? No, I'd rather give you information along the way and show you that everything's going to work out just fine.
Yeah.
And when you have questions, you just call me and we'll talk through it.
Yeah. And it shows how important it is that the real estate agent and mortgage broker are working together a lot of the time, because I know for my clients, sometimes they don't always think of, when it comes to offer time, oh, I better touch base with my mortgage broker. I think I often have to step in and say, okay, let's speak with the mortgage broker before we actually write that offer.
And I'm fully open to that.
Right.
If you need to reach out to me on a weekend, yeah, we do that.
Sure.
Okay. Just send me a text. You don't check email very well on the weekend. Send me a text. Okay.
I think that's most of us.
Yeah. And then I don't get that surprise on Monday morning. And sometimes it is. Sometimes it's fine. Sometimes I'll tell you as a realtor, it's like, yeah, they can buy whatever they want. They've got the big down payment. They've got the really big salaries. But then there's the ones where we're right at the very top of their limits, and it's like, no, please call me.
Yeah.
Please just double check.
Yeah. Move
Yeah.
carefully. Okay.
Yeah.
Investors, tell me a bit about how they've been affected by the rate increases. How is that different?
So I just did a scenario for a property yesterday, and it was a bungalow out in, I want to say, Winchester. Was listed for $360, and I ran the numbers on it, and with 20% down, it cash flowed at $150 a month. That's after insurance, after property management, after taxes.
Yeah.
There are properties out there that still will cash flow.
Mm-hmm.
The problem is the ones right in Ottawa, like the big triplexes, the really expensive triplexes, they're being affected by the income, the net income of the property. So you've got the gross income of the property, you've got the net income after expenses.
Yeah.
So then you're left with, say you get $10,000 a month in rent, and your operating expenses $2,500. I have to make that $7,500 fit the mortgage payment.
Mm-hmm.
So it's not like you can just put 20% down anymore or 25% down. If the property is really highly priced, but it's a beautiful property and it's going to get the cash flow, then that's fine. But sometimes, say that only qualifies for a $600,000 mortgage. So the down payment for the investors is actually starting to grow based on the rising rates. The challenge is if you had a rental property 3 or 4 years ago and you fit the guideline, but you qualified on a 2% rate, and now I'm qualifying on a 6% rate for a rental, you have to put down a much larger down payment. Mm-hmm. And there's a disconnect in information that's happening across all of the banks right now on how much you do qualify for that.
Okay. So it sounds like probably some smaller investors are getting squeezed out a little bit of the opportunities, and the people with the larger down payments are only able to capitalize right now.
Yes.
Okay, so I figured we could switch gears a little bit and talk a little bit about you and your business. So I'm curious how long you've been doing this and what initially drew you to it.
I've been doing this for 20 years. I started in the restaurant business.
Okay.
And I was always the numbers guy. I was the one who ordered the food, did the profit and loss, did the payroll. And after being a restaurant manager for more than 10 years, I realized, I sort of like my weekends. So I transitioned into sales. I did a bunch of different sales jobs. And then I started doing reverse mortgages back a long time ago. And I did that for a couple of years. And I realized that, this is a great niche. This is something that I really like. I ended up relocating back. I lived in Toronto for a long time. I relocated back to Ottawa 20 years ago. And I joined Capital Mortgages, and I never left.
Okay, never left Capital Mortgages, huh? Yep. Okay, what do you feel sets you apart from your competitors? Is there any kind of approach that you employ that others probably don't? I mean, you've been doing this for a long time, so I'm sure you've kind of carved out your own specific offering.
I don't think that most mortgage people take advantage of CRM programs.
Okay.
I don't think that they take care of the flow management, of informing the client about what's going on with process, giving them a lot of education. I think that there's a lack of education. Be like 15, 20 years ago, we'd be like, yeah, here's your mortgage, you're approved, everything's fine. Mm-hmm. And you wouldn't hear from the client until it closed. Then you call them out, close, say, hey, everything closed? Okay, good. But like a lot of the time, you need to educate people along the way, either before the beginning of the process or during the process, and just reach out to them. Mm-hmm. So we reach out to people constantly from the beginning of the application to the offer, all the way to the close date.
Okay. And do you have any kind of specialty? Like, do you specialize in investors, first-time buyers, or anything like that? Or
every mortgage broker in Ottawa is going to do any kind of mortgage offering yourself.
Okay.
My favorite is one rental. I want everyone to own one rental property. I think that it is a life-changing thing for not today, but I'm talking about paying off your mortgage 10 times faster, okay, or paying off your mortgage 10 years faster, or paying for all of your children's education, or buying that vacation home, whether it be a cottage or a condo in Florida. there are a lot of opportunities that owning one rental property can really, really change your life. And if you start to like more, then, I've got clients that have 3 or 4 rental properties. And, in 10 to 15 years ago, they're set. They don't have to worry about anything.
It really is like the best
It
wealth
is.
tool. Yeah.
It is. And even though we've gone through such appreciation in the marketplace, we're going to go back to that 2 to 5%. Ottawa is a juggernaut when it comes to increasing their property values. We have amazing income base across all of Ottawa, whether you're a government worker, a healthcare worker, or a high-tech worker. And that makes up 75% of all the people in Ottawa. So we've got that base where it's not like you're going to lose your job. They're going to keep on paying their mortgages. You don't get those high fluctuations like in Toronto or Vancouver. And that's the best part of being right here.
Yeah, a little bit more stable.
Much more stable.
Yeah, absolutely. So it could be a hot topic, but tell me a bit about the advantage of working with a broker over working with the bank, let's say.
The bank is one rule book. The bank has got, the only thing that they can do is what's in that green rule book or red rule book or blue red book rule book. There's, I have 60 different rule books. That's the biggest difference right there.
Yeah.
I'll answer your calls on the weekend. I just feel we give better service. We have better knowledge. We give better service.
Yeah, gotcha. What's the most rewarding part of your work or your job?
When I get to call the client on close day and they've got their keys.
Yeah.
That's the best day. It's like everything closed, everything went down, and best part of the job is when they have the keys.
Yeah, I think all parties involved. That's
everyone
that's
takes
the
a
best
sigh
part.
of relief. Everyone goes,
yeah, exactly. All right. Well, why don't you tell me about maybe the most interesting or complex transaction that you've been involved with that you can think of, and how you got to the finish line or how it got solved.
I had a client last summer. She called me up and she's like, the bank won't approve me. I don't know what to do. I can't get a mortgage. And I'm like, okay, all right. So we went through our application and credit, and there was an outstanding collection that had been paid but wasn't documented properly. All the rest of her file was great. Income was good. Credit was okay for this one blemish. We talked them through the process of getting the release letter from the who she owed the money to, and we get it sent to Equifax, get the credit cleaned up.
Okay.
All right. Then she goes out and buys a house. She's tried 3 or 4 of them. It didn't work out because it was that time last year.
Yeah.
And then the house that she did pick, it fails the inspection for the septic.
Oh shoot. Okay.
The previous homeowner had put a above ground pool on it, on the septic field. 20,000 pounds of pressure on sand and tubes.
Yeah.
So it crushed it.
Oh no.
And she calls me back, and the realtor's calling me, going, what are we going to do? What are we going to do? And I'm like, oh no. Get me a quote for the septic replacement. Oh, let's see what we can do. We go back to the lender. We get it covered under something called purchase plus improvements.
Yep.
So we're adding the $30,000 septic field into the purchase price of the house.
Okay.
The client had to pay a slightly bigger down payment because it changes the numbers in the deal.
Yeah.
And we get it approved, and it closed in September, and she just had the septic work done in January.
Oh wow.
And it closed, and everything was fine, and now she has a much better house and a working septic field. But those are really tough. I can't say
chaotic.
Like the purchase price improvement program is really, really amazing. But not all lenders will replace a septic field, because they call it deferred maintenance.
Okay.
So you have to know which lender is going to accept something like that. But to go from a client who comes to you crying because they're like, I can't get approved anywhere. I've tried so hard and I don't know what to do. And they're not telling me why my credit's messed up, and I'm like, well, fix this and fix that. And then in the middle of it, have the file almost blow up because of because of a septic field, and then cross the finish line and close it and finish it.
Yeah.
You know,
So crucial to have, someone you can work with.
yeah, there were a bunch of different things that went on there. That was a fun file.
Oh my goodness.
Yeah.
Well, I'm glad you finally got her to the end there. I'm sure she was
Yeah.
very happy
Yeah.
to finally have working set. Did she keep the pool or did she move the pool?
No, the pool had been gone.
Okay.
They the homeowner knew.
Wow.
Okay.
Wow.
So they had gotten rid of the pool last, I don't know, a couple of years ago.
Yeah.
But they knew that they caused damage. They just didn't want to admit to it.
These things. Well, Brad, I think we've taken enough of your time. Thank you so much for joining us today. Where can the people find you? Which social channels are you on?
I'm on all the social channels except for maybe TikTok. All you have to do is Google Brad's Mortgages. You'll find pages of me on Instagram or Facebook and LinkedIn. I'm easy to get a hold of. You can reach out, and I'll be happy to help you.
Okay. Perfect. Well, thanks for tuning in to Walker Talks. We'll be sure to share Brad's information in the episode notes, and you can find the Walker Real Estate Group on social media as well to see what we do, and please reach out to us if there's anyone that you'd like to see on the show in the future. Thanks, and see you next time.